In this video, we're going to give you an overview of the exact procedure that we follow in determining when we're going to take a trade, and we're going to give you the mechanics of how it works. We won't go into too much detail on the explanation, but we want to give you the overview. Step number one is to identify the trend. Now, we're going to look at this period right in here for determining the trend. Now, obviously, when the slope of this indicator is negative, we are clearly in a downtrend. And until that slope returns to a positive one, we'll remain in a downtrend. But once it does, we're in an uptrend. Now, let's look at the market profile. We're going to view the market profile lines very simply. If the high of the bar is barely reaching the profile line or just barely exceeding it, that's considered resistance. If the lows of the bar are barely reaching the line, the nearest line, or exceeding it, we're going to view that as support. So quickly, right in here, this is a resistance. The highs of the bar are just barely making it up there. Once the lows of the bar are at or above the nearest line, we're then going to view that line as support. So right now, as the market moved down and is coming back up to this line, at that particular moment, this is a resistance line. But as soon as we get to this bar, where the low of the bar is now exceeding the line, we've now considered that as support, and the next line higher than that potentially becomes resistance. So the point of the matter is, all of the other indicators here are showing that this peak here is a pivot. We have our indicator in subgraph 3 barely making it to the overbought condition. We have a divergence on the volume, and we have a further divergence on our modified RSX. Comparing this high to this high, higher high on the SPOOs, lower high on the indicator, and the same is true with the volume. So we're going to be into a short. Now the question is, what are we going to do with the rest of this? Because this is pretty obvious. So we're now going to show you, once we know what the trend is, we're going to show you the contrarian and the mechanics of the contrarian indicator. From the standpoint of the profile, your first contrarian is this move up to the upper value area, where the high of the bar is now below the upper value area. It's just barely hitting it. So there's your first contrarian. You've got another contrarian short when this high moves into the point of control. This is basically a 2-hour period from this all the way down to this. So you've got two real obvious opportunities for a short in here. But now let's look at this particular period more closely using a faster interval. We've now looked at the same period, but now we're examining this according to the contrarian indicator. We're in a short, so we want an overbought condition. We identify that overbought condition, first of all, right here. This is the exact position that we were talking about a moment ago. And our indicator here shows an overbought condition and no strength at all, according to this particular indicator. And there's a little bit of a divergence down here. But in any case, the volume is changing, and we're now going to look at this same period at around 9:43 on a even faster chart. 9:43. The purpose of this video is to go into the details, the mechanics we follow in pulling trades every single day. We use the same process all the time. So we're going to get right into our discussion by answering the first and most important question, and that is, what is the trend? Look at our other videos about establishing the trend so you have a little more information than we're going to go into right here. But based upon this particular chart, we're looking at a change in market direction right in here for a variety of different reasons. Let's first of all look at the indicators, and we'll go to the profile. Up until this time in here, on the indicator in subgraph 2, we were long. The slope of this is now beginning to change, and therefore we're in short. But what really gives this away is that we barely make it into an overbought condition on indicator number 2 here. We have a divergence in the volume as well as a negative slope just beginning to form in this particular indicator. But in any case, we see other reasons for a short here. Let's go look at the profile. We're going to view the profile in this fashion. When the highs of the bars are barely above, at or above, the nearest market profile line, we're going to view that as resistance. If the lows are above or slightly below the nearest profile line, we'll view that as support. So, for example, as the market moved up to this point right here, this was a resistance line. The highs of the bar just barely making it up to that line. As the market comes down and breaks below the point of control, we're still short, and we would view the point of control as resistance until the lows of the bar now are at or above the point of control. So this first bar here doesn't make it down that far. This is now a point of support, and we expect the market to continue to move up. Once it hits the next line above, the high barely makes it, and we see the market recoil just a bit. As it continues its assault on the upper value area and the extended value area above that, the highs are barely making it above, and therefore you're in a potential short trade. Now, once that trend has now been established, what we're really going to look at is how to take advantage of the contrarian indicator. Now, the contrarian can be seen partly by the profile. Here, in the first attempt to move back up to the upper value area, the highs barely make it, and so this becomes a contrarian. It's telling us this is resistance, this market's going to come back down. Second instance of this is right in here, where the highs barely make it to the point of control and then continue it short. So we're going to now look at this same period, about 9:48, on a much faster chart and see why we call that an opportunity for a secondary short because of the contrarian indicator. We know that this is likely going to short just because of the profile. But now watch this. A faster chart shows our key indicator here, indicator number 1, being overbought. It hits 100. It's overbought. Indicator number 2 is barely making it above before it begins to turn. Volume is changing. We've got a bit of a divergence here, and therefore, and in particular, because of indicator number 1, we know that this is a good opportunity for a short. We're going to see the same thing happen over here. And once again, over here. 3 opportunities for a short trade. Now, there's a bit of a concern here because of the divergence that is being plotted by that green line. So that might be a questionable trade, but in any event, you've got at least 2 very clear overbought conditions while the market is shorting. So now let's take a look at this same period in an even faster interval. Now, here we are right in here, 942, 943, and in a closer examination of this move, we can see we're definitely overbought here. Indicator number 1 is at 100. We have a nice divergence on indicator number 2. Higher high here, lower high here. Nice divergence. The volume is just beginning to change in here on indicator number 3, and the modified RSI is already dropping. So this is a very clear short trade right in here. There's your contrarian, an overbought condition during a short. That's what we refer to as the contrarian. Now, this is the setup. But the question is, how can the premium and the Tikkie now really help us to identify exactly when we're going to pull the trigger? When we're ready to pull the trigger, once the setup is established, we're going to move over to a 5-second chart. Now, just before we show you the premium and the Tikkie feed, just one other thing. On this particular chart, our indicator 2 here, we're going to refer to the market profile. There's indicator number 1. But in any case, indicator 2 here and indicator 3. You see the divergence, nice divergence in here, lower highs on the indicator. And here you've got an overbought condition. Here you barely make it into an overbought condition, but a big divergence here. So this is all telling you this thing is going to short. But now let's take you over to the 5-second premium and show you why this really, really makes sense. All right, here's where we're going to pull the trigger. We're into our setup, and now we're looking at the premium and the Tikkie in particular. Now you don't see that on this chart, but you see instead are indicators that are sitting on the premium. So we're letting the indicator show us when to pull the trigger. And what these 2 indicators are, indicator 1 here and indicator 2 here, these are modified indicators that are plotting overbought and oversold conditions using longer intervals than what we see being plotted on this chart. We have that capability. Just like we're not showing the premium here, the indicators that are sitting on the premium are sending this data over to this chart. So in particular, we want to look at what's happening to the premium, and we're reading the premium using two different sets of settings. We're also reading the TICI in the same fashion. So indicator 3 here, this is our modified RSI, is sitting on the premium. This, however, is sitting on the TICI. Here we're sitting on the premium as well, but with a slightly different setting. And then over here we're sitting on the TICI with a slightly different setting. And what we want to see is the slope of all three of these changing. And that's easily identified when the color here changes from cyan to yellow. Ideally, on the indicator 3 here and indicator 4, ideally we want to be above the 0 line sloping down. That doesn't always happen. And sometimes when that does not occur, it's even more clear that the market's going to shift. But usually we want this above the 0 line. So here's what we've got. Right at this moment here, all three of our indicators are beginning to slope down. Okay? Let's just make this a little bit easier for you to see. There we go. All right. Okay, so right in here, we've got a change in direction right there, and at this particular moment we want the highs of the bar getting as close to the upper value area as possible, and so that one uptick here makes it to that point, and all of our indicators are confirming this. So right in this particular area here, 5-second chart, we're going to take a short trade, right? And if not there, once it breaks below the upper value area, we've got another opportunity, and we've got everything agreeing with the short trade right in here as well. So a couple of different opportunities there to get into the short. That's the mechanics. That's why we call this pro trader. The pros are looking at this in a very precise way, and that's the way we want to do it. We want confirmation. Now, we're going to take this just one step further just to show you what we mean by this confirmation. But keep in mind the principles that we've followed here. Number one, we establish the trend. Number two, we look for the contrarian. We look for an overbought condition when the market is in a downtrend. Conversely, we want an oversold condition when the market is rallying. Now, the premium and the TICI are being plotted here. There's one more piece of information that some of our traders use to help them see this is the right thing to do. In this chart here, we are showing you the actual premium and the TICI on this chart. Now the next four indicators are duplicates of the indicators that you just saw on the previous chart. In addition to that, the next or the last three modified RSIs are charting the activity in three other market symbols. Markets that can have a significant bearing on the movement of the SPOOs. And all three of these markets are beginning to trend down, as you can see by the color of the indicator. So in addition to the premium and all of the other conditions that we've just described, we have confirmation from the other three markets that we monitored, all saying we're losing strength at this point, this thing should begin to come down. Now, granted, we could be wrong. We could be wrong, but this is the methodology that we follow. Same methodology all the time. Now, a real quick lesson on the premium. Now, I can't give you all of the mechanics on this, but you see this high on the premium right here? That high of the bar, which is above this particular line, indicates that the SPOO should move higher. You're at 28.50 at that particular moment. So we're going to wait until that happens. We're going to wait until it moves higher, and then we're going to read the premium again. At this moment right in here, we're at 28.75, one tick higher, premium is lower, premium is divergent, and we get another high here, tags that price, 28.75, and then finally here at 28.75. And you see how the highs of the premium on those particular 5-second bars are dropping. And your indicators are confirming that. The raw premium tells you this is the time to pull the trigger right there, right when it tags the high. That's how precise we get, and we show you how to read the premium in our course. Having all of this information makes your trading very, very mechanical, but very, very precise. That's ProTrader, and I'm Rod Kusanen for Risk.